So Morgan Stanley house expects it to go to $80. What needs to happen for it to go to 80?
Well, so we expect oil probably not to go quite that high. But I do think, right, the energy sector is facing both a seasonal, generally a supportive seasonal period where, you know, you get peak summer driving season in the U.S. where inventories have already been being drawn down with, you know, a number of tricky geopolitical events, both recent actions in Syria, but also you have the recertification of the Iran deal that is coming up in May. You have a new national security team around in the U.S. administration, and it's uncertain about how they will approach that. So, you know, I think those are also uncertainties that I think we can see justifying, you know, being supportive for oil being where it is, for investors pricing in that risk premium for oil prices.
Do you worry about underinvestments in the oil and gas space, and what does that mean for prices longer term? Well,
that's, I think, another, you know, I think important structural issue. So look, you have these two competing forces. You have over time the migration away from petrol and gasoline vehicles towards electric vehicles, towards alternative energy. That's obviously enormously important. That is a good development. But at the same time that demand long term is going to be declining, the supply of oil is also probably going to be declining because companies have cut back enormously on their capital expenditures, and oil is increasingly difficult and expensive to find. So, you know, I think those are both going to be push and pulls, and ultimately, you know, in our view and Morgan Stanley's view, the clearing price for oil needs to be higher than where it is today to kind of to encourage that investment, even with those important alternative energy sources.
Okay, when you look at shale production in the U.S., do we have a break-even point for them, or because they're all so different, it's still a difficult market to assess?
Well, I think that it's interesting. So shale is enormously important. It's enormously disruptive. But I think, you know, we think the ultimate clearing price for where shale, to encourage that shale production is higher, right? Currently, we think the U.S. is already drilling on its best, most productive, best connected acreage. As you move to increase production further, you need to move away to that, to places that are less well connected. Unemployment is very low in many of these drilling regions, which puts wage pressure and other cost pressures in the system. So, you know, I think shale will continue to be an enormously important producer of energy, but the idea that it's always going to be as cheap as it's been over the last couple of years, in our view at Morgan Stanley, just isn't quite right.